Making money is about your return on investment. Are you doing your return on investment sums? So let's look at what we have done so far. We've used the continuous refinement approach to generate settings that potentially can come up with just over $1,000. We've then used the test all the possible settings you can test approach, and that has come up with $1,570. Bear in mind that that is the most optimized income levels. It's most probably more realistic to go for most probably half of that, and with most probably less specific settings. But let's say those are the numbers that we're going to be working with in the next lecture. One of the areas that very few Forex traders take into account is the amount of required in their account to make that kind of money. So let's have a look at how you calculate that, or how you can find that using the optimization approach. So I'm going to go back to our Forex tester, and that will give us the answers. We're back at our strategy tester, and I'm going to click on expert properties to go into the EA settings page. Then first of all, I want to load the settings that gave us the just over 1,000 income, which is the one based on the day of the week setting. That was the last step-by-step test that we did to come up to with the just over $1,000 of income. So I'm going to load that into the model and click OK, and just run it to make sure that I've got the right setting. Yes, it's just over $1,000. So what we're going to do now is we're going to go back into the settings, and we're going to say, how much money do we need to make that income? And what we've been doing up to now is we've just used a rough $10,000 capital. But now we know the income, but we don't know how much money we're going to need to make that income. So what I'm going to do is I'm going to just start with 1,000, unclick that, and click OK, and run it again. So the idea now is going to be to run it until we get a margin call. Now that's still fine. 1,000 has given us the same income. So we just keep on doing this process. Unfortunately, there's no shortcut. I'm going to go straight into 500 and see if that works. So we have a look. Well, that still is giving us the same income on $500. So we just keep on this cycle. I'm going to go to 300, just out of it. This is trial and error stuff. Okay, so on $300, we are still making $1,000 return over a year. So let's keep on going. 3,000. So let's make it 250. And again, on 250, we're still making $1,000. So, wow. Let's go to 200 now. Even on $200 in our account, we're still making $1,000 profit. So let's keep on going. This is amazing. $100. Gee, that's very low. And even on 100, we are making that amount of money. Now the reason might be because one of the first, no, the first transaction was in fact a loss. So it just shows you the limited drawdown in this particular system. So I don't even know if I want to go lower than 100. I'm starting to feel uncomfortable about that, but let's keep on going. Let's go down to 80. Still no margin call. Let's go 50. My goodness. I don't think I've actually come across one as efficient as this. All right, there's the first time we actually got a margin call at 50. I'm just going to go with 100 to start with. As being the minimum capital that we would need, 100. I'm just going to run that once more, just make sure that it's fine. And I'm going to run it just once more using the every tick system, which shouldn't make a difference, but just want to double check. Now I'm really hoping that this particular lesson or this particular lecture that you are watching will be one of the most important Forex trading lessons that you ever have. Because I have found very, very few Forex traders that relate their income to their investment. They just want enough money in their account to cover whatever. And if you're doing that kind of thing, you are wasting a lot of capital. Your return on capital will not be optimal. Okay, so all fine at 90% modeling quality. $100 will give you that kind of income. Okay, so let's do the next test, which is the test on the data set that produced $1,500. So we'll go in here, go into inputs, go into load, and this time I'll load the total test positive. That's the one that produced the 1,500. It's loaded. I say okay, and then I'm just going to run it quickly to see if that's the right setting. 1,488, that's close enough. There is a small difference, and I'm not going to worry about that too much. And oh, this has been run on 80 as the initial deposit, and it is giving a positive. So that could be the minimum investment required. If you can make that kind of return on $80, that's great. So what we then do is let's go back to our table that we had. So I've entered the 80 as the investment required to make that 1,500, and the return is almost 2,000% on an annual basis. Now these are highly inflated figures because we're using the absolutely best settings and the absolutely minimum investment requirements. But this gives you an idea of the type of thinking you should have to squeeze as much income out of as little investment as possible to maximize your return on investment. You might again say, all right, that's great, but 1,500 is not that much. What we've proven here is the minimum amount of capital that you can invest. We've also shown a certain degree of risk that's involved. So what I like about this particular system is there's only one transaction active at any one time. So your margin requirements are actually very low. Your risk, as you can see, is very low. And we haven't actually looked at some of the statistics of this particular system. Let's go and have a look at the statistics. This particular statistics say that the overall number of profitable trades is only 20%. So only 20% of trades are profitable, and there are 80% are losses. 80% are losses. But where the difference comes in is that the average winning trade is 226 pips, and the average losing trade is only 17 pips. Or dollars. That's a huge difference, and that is why these systems are so profitable. Now you have an example of a system that is 20% profitable, 20% successful, and produces a huge income because of the fact that the income on profitable trades are pretty is pretty high and the losses are pretty low. So I hope that gives you a feel. Now, what do you do in a case like this when you have these kind of statistics? To make money out of a system like this, what you need to do is increase your lots. So instead of trading with one lot and using $80 in your account, trade with 5 lots and put $400 in your account. So that's 5 times 80 is $400. So that's how you would work it. You'd put $400 and trade 5 lots, or 0.5 lots. So that's the approach that one should follow. Now, I would suggest that as we said earlier, this is looking at the cream of the crop type of results. I would firstly double that amount. I would double that amount if I was trading this, and I would say I would halve that amount. And I would say, right, I can still live with 500% return on a year. I would then say, okay, how much can I afford to lose? Let's say I can afford to lose $1,600. I would then put $1,600 into an account, and I would lot size it by 10 times the lot size that produced the test amount, which I think we only used 0.1 of a lot. So that's how you lot size. You lot size according to the investment that you need to produce the income that you want. 500% return is still pretty nifty. So I hope this has sort of opened your eyes to things like return on investment, because quite honestly, that's what the big guys look at. The only thing they look at is return on investment. How much do I have to risk? For what kind of return do I have to make? And very, very few traders do that. Traders think in terms of stop loss and returns, but they don't actually look at the account. Some traders trading a system like this might have $3,000 in their account, which is a total waste of capital. You're not using 80% of your capital if you're doing that. So I hope you found this lecture interesting and that it opened your mind to what is really important in Forex trading. And as you've seen, success rate, we're looking at a 20% success rate with this particular system, and yet it is highly profitable.